So this week, kind of reverse. Stocks down, the eco data better. Joe, one part, though, of the economy that has been completely consistent and kind of weird is the housing market.
Yeah, once again, no one predicted a housing boom in a pandemic and a recession, and yet here we are, and the data continues to look very good. However you slice it, new home sales, existing home sales, housing starts, housing permits, housing prices, and based on the GDP report, this residential investment, that right there is more than a V. I don't know what shape that is, maybe a square root, something like that. Much more than a V. It's pretty impressive.
It really is quite amazing. How sustainable? I mean,
That's the question.
Let's get the inside track. Ivan Kaufman's with us, founder, chairman, CEO of Arbor Realty Trust. And you're a man, Ivan, who's at the coalface of this. You're particularly focused on multifamily units and the like. And is there any cause for concern? Are you seeing, you're a lender in particular, are you seeing multifamily units unable to repay at the moment?
So we're right in the middle of it, clearly. One of the most prolific multifamily lenders, and we're also extremely busy on the single family side as well. All the fundamentals still remain very, very good on the multifamily side. And one would think with the transition of people moving to homes, there'd be some softness there. There's a little bit of softness on the Class A high rises, some of the new products, because a lot of those people are moving to the suburbs. But all in all, the asset class is performing extraordinarily well, and we do not see any weakness. Every month, when people are making their payments and we're looking at the rent payments, they're barely off. So we're very surprised on the upside.
What's the main theory for why people have got this so wrong? I mean, obviously, people didn't expect this sort of big housing boom, but for several months now, people have been talking about this massive foreclosure wave, some sort of need for relief, and there has been pain, but so far, it just has not materialized the way people expected. It's certainly nothing like the last crisis, and I'm curious if you could share your theories for why that is.
So I think the fear factor was definitely out there, and until they passed the initial CARES Act, nobody knew which end was up. And once they did that, there was an enormous amount of relief. I think you have to look at the CARES Act, the impact it had. You also have to look at the fact that people were spending less money. So people are home, they're spending less money, they're protecting their homes, they're working from home, and they're taking good care to make sure that they're making their payments so their daily lives are not interrupted. I do think in the next couple of months there's going to be a level of stress, but the level of stress that we're starting from is almost a perfect point because we haven't seen any stress at all. Of course, all of us are sitting here saying, when's the next CARES Act coming out? How much longer can consumers wait? And that's what we're going to see, what's going to happen over the next couple of months. And I believe there'll be some package that will come out. And it may be a little painful for the next couple of months, but all in all, I think our renters and homeowners are going to be in pretty good shape.
So have all the renters been able to keep on repaying month by month? Have you been able to give any reprieve? Have some been able to put off payments, or indeed have there been any effects of an eviction moratorium for your business?
So initially there were thoughts there would be a lot of forbearance, and I think the first month or so there were a lot of forbearance plans that were put out. But the last couple of months, there's been almost no forbearance requests. So people are making their payments. The system is working very effectively. And we have to keep in mind that interest rates are at extraordinarily low levels. And, you mentioned earlier on the impact of housing and what's happening with housing. So you almost have like the perfect positive storm for housing, right? Low interest rates, people moving out of the urban areas, people buying homes, and that's why the housing market is on fire. All those factors are working well together.
I'm curious, okay, so let's talk a little bit about urban real estate, because you mentioned there is some softness in the top tier real estate, people moving to the suburbs, also a lot of anxiety, and if you look in the market, a lot of pain for commercial, urban real estate in commercial areas. How distressed is this, and do you see signs of it coming back, or is it just way too early to really have a feel where those sort of marks are going to end up on the value of this stuff?
I think that if you go to New York City or San Francisco or LA, they're like ghost towns. There is a real concern. And in those particular areas are a lot of new units being delivered. And it's those particular areas that are seeing a flight. Not only are they seeing a flight, people are not coming back to the city. So we expect there to be a reasonable amount of softness in those markets, specifically on market rate apartments. So you'll see some concessions. You'll see a disproportionate amount of vacancies in those areas. And that should last, in my opinion, all the way through next September. So you have another 11 months of really slugging it out in the urban areas to get some level of normalcy. And keep in mind, you don't have universities open, you don't have students coming back. So there's just a whole slew of factors that you're going to have an abnormal market for the next 11 months.
What do you do if you think that that abnormal market is sort of artificially held and will come out the other side quite dramatically with a vaccine? Do you buy up when it's cheap in the urban areas, expecting that people return to normal? Or do we have some sort of permanent shifts with people wanting to be in the suburbs?
So it's interesting because it's an important perspective to have, right? Up until last month, everybody was going quarter to quarter. What's going to happen the next quarter? What's going to happen the next quarter? Our outlook is forget about the next quarter. You're not going to see a return to normalcy until September. So the way we look at it is twofold. Number one, you got to carry the assets you buy through now in September. And then you really have to take a look at what those markets are going to look like in September. Are they going to be hit? Are they going to be soft? Are they going to return to normal? Are they going to return to, a level below normal or above normal? So you have two factors you have to take into consideration in looking at opportunities. One is your cost to carry between now and when you think the market's going to recover. And second, what is the recovery level going to be? And clearly, if you go outside of the urban areas, the recoveries, they're doing really well. In the urban areas, you have to really calculate where rent's going to be, where occupancy is going to be, where a tax is going to be. And those are the things you have to really put time and attention to understand those markets.
All right, really appreciate it. Thanks to Ivan Kaufman, founder, chairman, and CEO of Arbor Realty Trust.
Really at the coalface there, fascinating perspective. Meanwhile, get more fascinating perspectives. Subscribe to our weekly podcast. It's called What You Missed This Week. You'll find our best content each Friday to enjoy over the weekend at